2 deals, 2 markets, 1 principle, matching the right buyer to every restaurant listing. 1. Creative deal structuring closes a high-revenue, margin-challenged restaurant in Woodstock, Georgia. By Marcus Bafaro. We sell restaurants. WSR. G.A. Marietta and Cumming. Not every restaurant sale follows a conventional path. The successful closing of listing number 30765, a bar and restaurant in Woodstock, Georgia, generating $1,647,224 in annual sales, required a different approach. The transaction demonstrates how thoughtful deal structuring can unlock opportunities that might otherwise stall. The challenge was immediately apparent. The restaurant operated with a rent-to-sales ratio of approximately 15 to 16%, well above the 6 to 10% range typically considered healthy for restaurant economics. That reality made the listing difficult to support under traditional lending and acquisition models. Solving the problem required identifying the right buyer and structuring terms that worked for both parties. The listing: strong revenue, compressed margins. Listing 30765 presented a valuable asset despite its margin challenges. The restaurant generated $1,647,224 in gross annual sales, with owner benefit of $148,830. The space was fully equipped and turnkey, featuring a 17-foot commercial hood, 35 televisions, commercial pool tables, and a kitchen designed for high-volume service. The restaurant operated independently with no franchise fees or brand restrictions, giving a buyer complete flexibility to reposition the concept. The $399,000 asking price reflected the value of the physical infrastructure and build-out that would be costly to recreate. The primary obstacle was the lease. Monthly rent of $18,068 pushed occupancy costs well beyond industry benchmarks, creating a structural margin challenge that discouraged conventional buyers and lenders. The seller's position. The seller was a successful entrepreneur whose primary business was a large HVAC company. Restaurant ownership had become secondary, and he had already sold another restaurant location before bringing this one to market. His motivation was clear. He was exiting his business interests and relocating to Costa Rica. That clarity made him open to flexible terms that would allow the transaction to move forward. Identifying the right buyer. Marcus Bafaro recognized the listing required a non-traditional buyer. The eventual purchaser specializes in acquiring underperforming or margin-challenged restaurants and reconceptualizing them over several months. Woodstock offered the characteristics he seeks: strong historical sales demonstrating real demand, a fully equipped facility, and a growing local market. With the right operational changes, the buyer believed the location could support a new concept and improved unit economics. The deal structure. The sale closed through a seller-financed agreement structured around monthly payments over 2 years. The buyer assumed full operational and financial responsibility at closing. The structure provided a clean exit for the seller while giving the buyer the runway needed to execute his repositioning strategy. A listing that had been difficult to sell through traditional financing was successfully transferred to an operator positioned to improve its performance. Deal 2. Second-generation restaurant acquisition in Panama City. Beach demonstrates the power of location and concept alignment. By Holmes Team. We sell restaurants, FL Tallahassee, Albany. The sale of listing number 22096, a fully operational pizza restaurant on Front Beach Road in Panama City Beach, Florida, highlights how strong locations and concept alignment can create successful transactions. Listed at $200,000, the listing represented a compelling second-generation restaurant opportunity on Florida's Emerald Coast. The asset. A proven operation in a prime market, Panama City Beach, is one of Florida's busiest tourist markets, and Front Beach Road serves as its primary commercial corridor. The 2,400 square foot restaurant benefited from strong visibility and proximity to lodging and beach traffic that drive delivery and carryout volume. The space included a large commercial kitchen, a dedicated delivery preparation area, and seating for 30 guests indoors with 12 additional outdoor seats. Monthly rent of $4,600 represented a favorable lease for a location on this corridor. Operational performance reinforced the opportunity. The restaurant generated nearly $750,000 in revenue during the first 10 months of 2024, even while operating under absentee ownership. Those numbers confirmed strong demand tied directly to the location. Why the previous owner sold? The seller was an experienced multi-unit pizza operator with locations across several tourist markets, including Myrtle Beach. The decision to sell was driven by operational geography rather than performance. Managing the Panama City beach location from a distance created inefficiencies within the seller's expanding portfolio, creating an opportunity for a buyer positioned to operate locally. Matching buyer to opportunity. The Homes team identified buyers whose background aligned with the opportunity. Two brothers, one from the Chicago area with a construction background and one a Panama City Beach resident, had recently become franchisees of Rosati's Pizza and were actively searching for their first location. Because the space was already designed for high-volume pizza production, the buyers could transition into the business without the time and cost associated with a full build-out. The owners are also evaluating the possibility of introducing a complementary concept such as smoothies or acai bowls, creating an additional revenue stream within the same location. What both transactions demonstrate, despite differences in price, geography, and deal structure, both transactions highlight several lessons that apply across the restaurant resale market. Strong revenue confirms customer demand. Even when profitability is challenged, sales history signals that the right operator can build on the existing foundation. Seller motivation influences deal flexibility. Clear reasons to exit often create room for creative solutions that traditional transactions may not provide. Buyer profile determines deal structure. Matching the right operator to the opportunity is one of the most important elements of restaurant brokerage. Creative deal structures and second-generation spaces reduce barriers to entry and allow buyers to step into operating businesses with lower risk and faster time to revenue. Ready to explore your options? Contact a certified restaurant broker at We Sell Restaurants for a confidential conversation about the value of your restaurant and what a successful sale could look like for you.